Hello viewers, we'll be going over the S&P 500, ticker symbol SPY. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're currently up 2 basis points, and on the 1-hour chart, we are at negative MACD, and we see a slight convergence in play. As for the 4-hour chart, if we expand that further, we are nearing the 50 moving average, and we are starting to see sideways action for the 4-hour MACD, and we are not near any overbought territory at all on the RSI. As for the daily chart, if we expand that further, at the moment we are resting along the 9-day moving average, this blue line, and we are also near overbought RSI. And as for the daily MACD, we see slight sideways action and a divergence. So for the trade idea, if we expand that further, for the trade idea, I would have a position size of less than 1% of my portfolio, and my entry for my long position will be at around $325.78. That is around the range right here where we made previous resistance that dated back to July 22nd. That will be my entry for my long position, and my sell target will be $342.86, and my stop loss for my long position is $319.95. On the other hand, if I decide to open up a short position, my entry will be $374.88. That's above where we made all-time highs of $399 or $339. So that will be my entry level, and my sell target will be $331.81, and my stop loss will be $353.06. So how did I develop these trade ideas? These ideas come from the day-by-day probability model. The range, bullish, and bearish ratios come from this model right here, which is available in the link below, so do check it out. As we progress to the 5th day or week of trading, we have a 55% chance for the S&P 500 to climb between 0 to 3%. On the other hand, a 37% chance or 36% chance for it to fall between 0 to negative 3%. And on the extreme case, a 9% chance to fall between negative 3% to negative 6.5%. So which one of these 11 models we should use as a reference? We'll be checking the line graph, and on the blue line is our current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below it is the one that we found on the line graph above. This trend dates back to August 28th to November 21st, 2013. So let's begin comparing both the trends. So we have 1, 2, 3 points, and on the trend in question we also have 1, 2, 3 points. So there's reason to believe if the trends and patterns are somewhat the same, the outcome and forecast should be fairly the same. So again, the model that we just examined was back in August 28th to November 21st, 2003. So we have 1 day out. That'll be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, and 5 days out, or a week of trading. So back then, the S&P 500 continued to climb roughly around, say, 60 basis points, so slightly to the upside. And if we examine the day-by-day probability model, that coincides with this standard deviation of 55% chance to climb between 0 to 3%. If we examine closer on the technical performance of each trend, on the current trend, what we have right now, compare that to the trend that we found in the past and compared it to, back then it was 8 basis points from a monthly high. Compare that to current trend, 18 basis points away from a monthly high. As for the monthly low, back then it was up 9%. Compare that to the current trend, up 12%. For the 10 simple moving average, it was up 73 basis points. Compare that to the current trend, up 1%. As for the 20-day moving average, it was up 1.4%. Compare that to the current trend, up 2.6%. And as for the 50-day moving average, it was up 4%. Compare that to the current trend, up 5.6%. So among the two trends, there are technical similarities. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.